Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of Wealth Press. It's 7:30 in the morning. The market's going to open up in exactly 2 hours. Now, you might have noticed I'm doing these videos a little earlier to give you guys a nice head start. Now, I got to wake up a little earlier, so I may be a little crank here, but that's the way life goes. And folks, if you're enjoying these videos, like our YouTube Wealth Press channel, subscribe to our Telegram channel. The link is below every video in the YouTube channel, and post comments, questions. I actually respond to them, believe it or not. Yes, I do personally every morning as I'm uploading the new video. So please, please, please stay tuned to our channel. Now, the market's opening up pretty good. We've had some good news. It's going to be a very, very interesting day for the market because you've got a kind of lot of stuff going on. You've got GDP coming out in about, let's see here, in about 1 hour, 59 minutes. Jobless claims I'm not worried about. They've been extremely stable. Petroleum status report is another major factor. And then tomorrow we end the week with personal income, new home sales. Existing home sales were worst number in a year. And consumer sentiment. But GDP is what we need to get past today. Now, as I mentioned, the markets are pretty good right now. We're having some upside on some earnings stocks. And before I get into there, let me just get into the GDP a little bit. The prior consensus was 2.9%. 2.9. Now we're looking at 2.5 to 3.0. I'm looking at the personal consumption annual rate, and I want to see the annual rate move up to 2%. But again, the consensus is right between 2.5 and 3.0. Let's see how it gets there. If it's too strong, the Fed may have some explaining to do, and boy, oh boy, we don't like that. Now, looking at the market, the Dow Jones looks like it's getting close to the bottom of that range. I mean, we may not be exactly there, but it looks like we're getting close to there. I'm not exactly sure if the market's going to hold today or not. Now, I'm going to tell you something interesting, and this is important, and this is a good takeaway for you. If the market isn't super strong today, especially in the second half of the day, there's a good chance we're going to go down substantially further, and let me explain to you why. Last night, today, we've had some pretty good, today's Thursday, by the way, for those that don't know the day that I'm in, and Wednesday, we had NVIDIA yesterday, and NVIDIA earnings were really, really good, and the company came out with some really good numbers as a result, and look at the stock. It's up near swing highs right now. Let's see if that's that's a very, very positive move. AMD is contributing as well. It's up quite a bit, almost 4%. So it'll be very, very interesting to see if this rally fades towards the end of the day or if the momentum builds up. But that's going to be very, very, very important. In light of that, today you've got earnings on Alibaba, AEP, good stock to trade, AMT, another good stock to trade, Autodesk, great stock to trade, Beyond Meat, Square. You see where I'm going here? More into the mid caps and small caps. Carvana, Cars.com. Dillard's, Dish. Oh, Dish is coming out with earnings today. I didn't know that. My favorite stock is coming out with earnings. I hope it's a Dish served cold. Domino's, one of the best gaining stocks in history. EOG's coming out. FND's coming out. Genuine Car Parts coming out. Intuit is coming out. Let's see here. Moderna's coming out with earnings. And here you could see all the expectations right there. Papa John's is coming out. A lot of stocks are coming out. By the end of this week, actually by the end of today, earnings officially will be more or less done. There's just not going to be that much more to report. And I'll give you a full update. I wanted to wait later in the week to see kind of where we stand. But I'm probably going to be able to get a report out today and show you what's what and what the cumulative is. Last time I checked, we went from mid-December. We were negative down 2.9% EPS. We're now above 8.3. It may be even further. I don't know. I'd love to see the numbers come back, but I'm not happy with what I'm seeing right now. Let's talk a little bit about global economy and then move into the nitty-gritty. Worries over the Federal Reserve rate hike path weighed on sentiment following the release of FOMC minutes. Now, here's the good part. The minutes, and I wanted to highlight all of it because this is really important, actually. The minutes from the meeting showed Federal Reserve called for further monetary policy until there was substantially more signs of deceleration inflation, with few members favoring a 50-point rate hike. I think that's a little too much. The participants favoring a 50-point base hike increase notes that a larger increase would more quickly bring the target range closer to the level they believed would achieve a sufficient restrictive stance, taking into account their views of the risks to achieve price stability in a timely manner. So a lot of them are now going back on their word. Now they're not talking about 3 times 0.25. Now they're talking about potentially going to 0.50. That's very, very bad for the market. That breaks up the rhythm that the market had to the upside. Federal Reserve John Williams said on yesterday, that U.S. central banks remain committed to its 2% inflation goal, highlighting the monetary policy must bring demand down in line with constraints to lower inflation. Our job is clear. Our job is to make sure we restore price stability, which is truly the foundation of our strong economy. But in the market, we still have a 73% chance of a 0.25 basis point rate hike and only 27% of a 5.0. So I'm going to tell you right now that we're still pricing in a 0.25, and we still have quite a while to go till we get to a higher level because in terms of the bond market. The bond market is still pricing that in. Earnings, as what I mentioned earlier, NVIDIA, it's up 8%. Etsy's up more than 5%. eBay fell more than 5%, so kind of mixed. Today we've got Intuit, Bookings, Moderna, NT's, Autodesk, Square, Warner Brothers, a lot of stuff. And we're focusing on the GDP data in not in a couple hours, actually less than an hour. So crude oil inventories is coming out today. Now, interestingly, I thought this was really interesting. In Europe, Rolls-Royce surged over 18% after the company reported better than expected full-year results. Who the hell is buying Rolls-Royce right now? I want to ask you, who in the world is buying Rolls-Royce right now? I mean, really? You can't make this up if you tried, right? Ooh, the economy sucks. We're going into a recession. Businesses are closing down and people are unemployed, but we're going to go buy Rolls-Royces. Hey, whatever works, right? Free country. Shanghai Composite closed lower, and persistent fears of U.S. interest rates as minus for this month's Federal Reserve meeting showed members are still committed to fighting inflation. China is just gearing off of what we're seeing here in the U.S. Teladoc plunged 7%. They missed earnings. Advanced Micro is rising, and that's what I was saying. We can get some momentum on tech. Intel gained today after Morgan Stanley upgraded it. So you've got NVIDIA earnings that are good. AMD's up. Intel got upgraded, and this is what I'm saying. If semiconductors don't rally hard today and to finish the day really, really strong, we're in deep doo-doo. I'm telling you that as I sit here right now. We're in deep doo-doo. Looking at the bond market, which we should, the bond market looks like it's now starting to key off. The fact that it's not going lower, remember, the lower the bond market goes, the more fear it puts on, the more weight it puts on tech stocks. The fact that it's not going down could, and one of the reasons why I'm thinking that the Dow Jones has bottomed out over here, not totally low, but bottomed out over here and is now going higher. But looking at the QQQ, and we'll look at SMH in a minute too, it looks like it wants to go back and continue riding this channel. Look at that, right? It'll be very interesting. But I'm not seeing us breaking out of this channel because when we did one time, you already saw how that ended for us. Now the SPY, let's look to see the SPY is in the same category. See, the SPY is now below that channel, which actually makes a lot more sense, but it looks like the tech is holding up better than the SPY. But again, we're very close to the 200-day moving average, and I would find it very, very hard to believe that we're not going to break or kiss the 200-day moving average before going higher, especially with the Fed talking the way they're talking. Now, let's look at semiconductors. Semiconductors right now, the trajectory has been to the downside. Let me add a 50-day moving average here. Let me just make this into a 50 and see if we're keying off to 50. That's the 50-day moving average. So we're not even close to the 50-day moving average. And that's why, even though we're up 2.9%, we're at 241 right now, you got to be very careful. I want to see this thing close near the high of the day. If semiconductors don't close near the high of the day, we're just not in a great position. Now, let's talk about sectors. Sectors, because today is sector day. And what do? I always give you the top sector and ETF. So as you can see here, communication services is still the number one. Let's go back 1 week. Technology was number one. Remember I said they're going to start coming down? Technology, communication services, that was the 14th of December. Now look at it today. technology's all the way down here. It hasn't been holding, which is why I'm very, very critical and very cautious about what I think is going to happen with chips. And I'm skeptical. I think it's a short-term upside, but I think the Fed data is going to overpower it. I do think consumer staples and healthcare and utilities are going to start rising. I think we're going to see another upside for energies, but in terms of technology, I think technology is going to keep coming off. I really do. Communication services looks like it wants to go a little higher, but it's already filled that gap. I think more downside. Financials, I'd be very, very cautious right now. Very, very cautious right now. Consumer discretionary, I'd be very, very cautious with right now. Healthcare looks awful right now. And utilities don't look that great either. Honestly, look at consumer staples. Consumer staples did not actually close near the bottom yesterday, okay? And consumer staples are actually made a higher swing high. So I'm actually bullish on consumer staples right now. Also, if you look over here at consumer staples, I want to show you this. If you look at consumer staples, you could see that 33% of stocks are trading below the 50-day moving average, but momentum levels are starting to come up. See that? They're not going down anymore. They look like they've bottomed. Let me show you this. Oh, why can't I do this? I'm looking at the wrong thing. There we go. I do this every day and I'm still getting it wrong. So you see here, it looks like they've bottomed out and it looks like they want to go higher. So I personally like the consumer staples right now. And a lot of these stocks are very defensive. And look at the trend over the last 10 years. It's been very, very strong. Now, we are below the 50-day moving average, but I'm telling you right now, most assets are as well. We're not oversold. And I think we're going to start seeing higher prices on this. At worst case scenario, you have a congestion here. Congestion with a higher high, I like. I could deal with that. So in terms of options, what I would do would be, I'd go up to about 58 days. That's more than enough time. You can actually go to 6th if you want to. There's time there too. But I would go with the about 74, 73 strike price. And if you go to 421, they're a lot more liquid. Wait for the market to open before you make your move. But you could see right here, 75, 74. They have a spread right now because the market's open, but once the market gets going and gets tighter, you'll see the spread will be very, very narrow here. It's not going to hurt you too much. So right now, I'd like the January, February, March, April 21st expiration, 58 days to go. Don't hold this for more than 2-3 weeks. It's going to start decaying too much. But I do like the 74, 75s. I like these right here, this area. And you can see there's plenty of open interest and liquidity, and it doesn't really matter that much on the ETFs because, as I mentioned many times, these are synthetic assets. They are bank deposits. They're ETFs. They're not individual stocks. So it's hard to get these out of whack too much, so they have to be tight. I actually did a lesson on that. You guys should check it out. It's pretty cool. ETFs, you don't have to worry as much about open interest and volume as you do with underlying stocks, okay? Just giving you a little understanding of that. Now, before I let you go, I gave you the bond market. I gave you the expectation for the GDP. I told you where things are going to go, but I've got one more thing. Today is the day. I'm going to go live 1 p.m. Eastern time to reveal specific chart pattern that's helping me crack the code on the stock market. And the best part, it doesn't matter whether we're bullish or bearish. It doesn't matter if the market's going up or down. Now, I'm not using the pattern to just trade old stocks. I'm using it on some of the most explosive stocks in the market. And in today's live training, I'll share exactly how I trade this pattern and I generate signals for you guys, how we generate and how you guys trade this, how we pick stocks, our criteria, all the patterns. I'll literally give you the exact criteria so you could find stocks like these yourself. You do not want to miss out. It's very, very cool. Follow the link below this video. If you're watching in the Wealth Press YouTube channel, which is where I post these videos every day at about 8 o'clock in the morning, it used to be 9, then it was 8:30. It looks like the older I'm getting, the less I could sleep. So I'm getting them to you nice and early, and I also post them on my Telegram channel. Telegram channel is very cool. I give you guys bonus stock trades. I give you bonus picks. I give you pictures of my cats, some pictures of myself. Join our Telegram channel. It's really good stuff, and you get notices immediately on Telegram when something is happening. Anything happening with me, Telegram is on it. Follow the link, like the YouTube channel, like the videos, subscribe to our channel, and post comments. I know who you are. Bye. Have a great day. Be careful. We got GDP coming out in 45 minutes. It'll be very interesting. Follow the semiconductor stocks and the GDP and see if they can overcome it or if they succumb to it, assuming the GDP is negative. And we're still in the 0.25. The good thing is bonds are now turning higher, which means yields is getting lower, which can give technology a little boost that it needs. And we've had a few down days, which means we could have a couple of up days. Markets are very reverting to the mean. Follow the link below. Check out my session at 1 p.m. today. Do not hesitate. Do not procrastinate. Do not miss out. I'm wearing red. I'm on fire today. Bye, guys. Have a great day, and I'll talk to you soon. If you have any questions, support@marketgeeks.com. Bye.